From bankruptcy filings to cases of fraud here and there since November 2022 following FTX fall, it's been stories upon stories in the crypto world, and the cycle is seeming unending. News has come to flood the crypto space once again, as there seems to be yet another collapse in the industry. Genesis, a crypto-leading exchange, has filed for Chapter 11 bankruptcy protection following an SEC lawsuit against it and its former partner Gemini. Drama again? Perhaps so. In today's video, we'll be taking a look through this crypto lending exchange, why it became the next giant crypto collapse, and why there's an SEC lawsuit against it. So don't be in a hurry. Sit back, relax, and watch the video till the end. Hello, and welcome back to the crypto world. Genesis is a digital asset trading platform that allows buyers to buy and sell a variety of cryptocurrencies. The exchange was founded in 2018 and is based in New York City. According to its website, their all-in-one platform and white-glove services help institutions quickly access capital, lending, credit, and structured products to capitalize on opportunities. The exchange unfortunately filed for Chapter 11 bankruptcy protection earlier this January, making it the latest casualty in the industry. Along with it, two further organizations, Genesis Global Holdco, its parent company, and Genesis Asia Pacific, another leading division, also declared bankruptcy earlier. Perhaps you may be wondering, how did it happen? Genesis provided loans to over-the-counter companies and crypto hedge funds, but a string of poor bets made in 2017 badly hurt the lender and led it to stop withdrawals on November 16. According to the blog, Genesis has allegedly been working on a prepackaged bankruptcy agreement wherein creditors would consent to a forbearance term of 1 or 2 years in exchange for cash payments and shares in its parent company Digital Currency Group, DCG. The news comes just over a week after the Securities and Exchange Commission, or SEC, accused Tyler and Cameron Winklevoss, Genesis and Gemini cryptocurrency exchanges of selling securities to investors in violation of the law through their Gemini Earn lending schemes. The initiative offered to pay up to 8% interest and allowed Gemini users to lend their cryptocurrency assets through Genesis. Genesis retained $900 million in client funds from Gemini at the time. It stopped operating in November, and this money has since been the source of the feud between the two businesses. Gemini Earn was discontinued earlier this month. Cameron publicly criticized Barry Silbert, the CEO of Genesis' parent company DCG, for allegedly mishandling the money belonging to Gemini clients. The co-founder of Gemini accused Silbert in a vehement open letter he sent Silbert on January 2nd of using bad faith stall tactics and avoiding solving the issue in a meeting by hiding behind lawyers, investment bankers, and process, instead of sitting down to discuss it. Even after the SEC found both companies liable in its January 12th lawsuit, Gemini continued to blame Genesis. Cameron Winklevoss demanded the dismissal of DCG CEO Barry Silbert on January 10th due to reservations about his managerial skills. However, Darar Islam, the interim CEO of Genesis, told the court that before the lending platform halted withdrawals as a result of Genesis' exposure to the FTX contagion, the company had amassed liabilities of $5.1 billion, according to a report cited in Binance. The Winklevoss twins' Gemini company currently owns the greatest portion of Genesis' $5.1 billion debt to its creditors, with a market value of around the said $900 million, according to reports. Islam also provided a thorough account of the circumstances leading to the firm's collapse in his first-day motion at the New York court. He claimed that the crisis was brought on by the firm's exposure to Sam Bankman-Fried's FTX, as well as the panic among its clients, which resulted in a run on the bank. Clients from all around the cryptocurrency world sought withdrawals as a result of the market freeze brought on by the FTX bankruptcy in November. Genesis reportedly tried to arrange a $1 billion emergency rescue after FTX's collapse, but had trouble finding any takers, according to the Wall Street Journal. According to CoinDesk, parent firm DCG, which has a growing debt of more than $3 billion to creditors, has ceased dividend payments. Three Arrows Capital, 3AC, and Alameda Research, the hedge fund founded by Sam Bankman-Fried and closely associated with his FTX exchange, were given crypto loans by Genesis. During the crypto winter in July, 3AC filed for bankruptcy, and according to court documents, Genesis has loaned 3AC assets totaling more than $2.3 billion. And so, 3AC's creditors have been fighting in court in order to recoup even a small portion of the billions of dollars that hedge fund had held. Genesis's financial crisis had made Silbert's large DCG business public. The parent firm was compelled to assume Genesis's $1 billion obligation to be a result of the failure of 3AC. However, a subsequent communication to investors from Silbert included information about a further $575 million loan from Genesis to DCG for unspecified investment reasons. By developing public-listed trusts, DCG paved the way for investors to hold Bitcoin and other currencies in their portfolio without having any direct exposure to them. As trust in the conglomerate decreased last year, the discount to Grayscale Bitcoin's trust net asset value grew noticeably. Genesis was exposed to Alameda to the tune of $2.5 billion, but the position was closed in August. Genesis claimed that around $175 million in Genesis assets were frozen on FTX's platform after FTX filed for bankruptcy in November. Other sizable claims include a loan payable of $78 million from the high-yield decentralized platform Donut, and a loan payable of $53.1 million from a Van Eck fund. And according to Genesis's bankruptcy records, the corporation cited over 100,000 creditors in a mega bankruptcy case, with aggregated obligations ranging from $1.2 billion to $11 billion. Genesis is reportedly in discussions with creditors who are being represented by the law firms Kirkland & Ellis and Procauser Rose, according to sources with knowledge of the matter who spoke to CNBC. Heartbreakingly, Genesis has now joined the list of failed cryptocurrency exchanges that also includes BlockFi, FTX, Celsius, and Voyager. This collapse is shocking. Who would have thought that Genesis would have such a blow? Would there be a recovery? Before we continue with the rest of the video, do well to click on the subscribe button to subscribe to this channel to never miss any video we upload. You should know that despite Genesis's cryptocurrency loan operation seeking bankruptcy court protection, its trading division, which remained outside of Chapter 11, continued to move money around on blockchains, indicating that the operation was still operating at least partly normally. Blockchain information gathered by Etherscan shows that on the 19th of January, the day of the bankruptcy filing, a wallet managed by the Genesis OTC trading desk delivered around $125 million in Ethereum, USDT, and FTM to Kraken, Coinbase, Bitstamp, and Binance. The wallet has made a number of more transactions in the last few hours, receiving nearly $50 million in USDC. The actions are consistent with parent company Digital Currencies Group (DCG) assurance that the Genesis trading operation will continue to run business as usual. It's still early, therefore it's unclear how the spot and derivatives market will fare in the long run as a result of Genesis's lending organization's bankruptcy. The OTC desk wallet transmitted $50,000 in Ethereum to Coinbase, $20,000 Ethereum to Bitstamp, and $5,000 Ethereum to Kraken on Thursday the 19th, 2023, during the crypto movement. It also transmitted 3.9 million USDT to Kraken and 7.7 million FTM worth 2.4 million to Binance, according to Etherscan. According to Nansen.ai data, this particular wallet regularly transfers money on weekdays, so the transactions on Thursday the 19th, 2023 appear to be fairly routine despite the bankruptcy drama. However, Charles Story, head of growth at cryptocurrency index platform Future, stated in an interview with CoinDesk that Genesis's reputation is in the trash. Also, a Twitter poll was posted by the block journalist Frank Chaparro, asking users if they would continue to trade with Genesis following the bankruptcy of the lending business. But about 938 out of them had voted no. That's approximately 73.7% of them as of Friday the 20th in January. It's heartbreaking that the exchange had to go bankrupt due to these transactions, but it's still somewhat relaxing that not all of it is in the trash. At least some part of its component is still trading. Hopefully it may recover in the long run in due course, or what do you think? Leave your comments in the comments section if you have any. Also, do well to subscribe to this channel to get access to our other videos, and turn on your notification bell to get notified when we upload videos like this. Thanks for watching.